Hello and welcome to this edition of the New High Newsletter Roundup, where I'm going to be reviewing the New High Newsletter sent out this week by Bootleg Macro. You can see here on the screen, we are talking a lot about the indexes this week. It was a short week for the overall market with only having essentially 2 full days open if you kind of add things together. Really what we're looking at though is a big change in the indexes. We're kind of like this girl going into the pool. We are falling backwards and we're not sure exactly where we're going to land. So what we're going to do is just look right at what we got. So the first thing that I did was I reviewed specifically the change in the jobs report this week. We had ADP, which said that they did 497,000 new jobs in June, but the BLS only said 209,000. Now, the difference right there doesn't really matter because the unemployment rate didn't go up. But if we look here, we see the chart from the BLS where you can see that essentially what we've been seeing is down and to the right in terms of employment gains. Obviously, as we come out of COVID, we started to normalize for whatever the new normal is. We look at the unemployment rate, that didn't change at all. The one thing that I do want to note is that everybody is still expecting a recession, and the BLS number did miss the estimate. So you may see some slowing in job participation. You may see some slowing in certain sectors. But the one thing that's, if you click on this link right here, it actually takes you directly to the Bureau of Labor Statistics, and it does give you a breakdown in terms of where all of this individual labor went to. And they specifically call out like specific races, like whites only declined 3.1% in terms of unemployment. The jobless rate for adult men was 3.4%. For women, it's 3.1%. For teenagers, it's 11%, which is actually quite higher than I expected. For blacks, it's 6%. For Asians, it's 3.2%. For Hispanics, it's 4.3%. So essentially, you can get really deep into the data if you want to. If you want to see something like based on race, if you want to see based on where the employment was, so you can see government grew in June. You can see healthcare grew in June. You can see social assistance jobs grew in June. Construction, which surprised a lot of people, I imagine. So if you want to go ahead and you're on the New High Newsletter, that's where that link is going to go. And then if you're going to look at the one here, this is just going to take you to a CNBC article that's going to essentially highlight what ADP said, because they don't really give you the data. They just do essentially a press release. Now, the other really big news that happened this week was around the Yuan, which if you don't follow global markets, the change that happened in China was with essentially their Jerome Powell. They took the person who was their Jerome Powell, they essentially retired him and his deputy, and they've now consolidated it into what looks like potentially just one person's job now. This person right here, Pan Gongsheng. Pan Gongsheng, it looks like, is going to be the new governor of the People's Bank of China. So he was appointed the central bank deputy governor. He was appointed as the party secretary on Saturday. So what we'll see is that this guy is really going to have a much larger role in the world markets. And from my understanding of some of the videos that I watch from like Blockworks and like different places, this guy essentially has a big focus around currencies. So he's going to be really focused on the Forex, which if we look back here, one of the things I highlight is the current rate of, well, technically the current price right now that you're getting for a US dollar versus a Chinese yen. So if you don't look at Forex, essentially you want to imagine that the USD is $1. And then this is based off of what that $1 can now buy you. So you want, if you're Chinese, you want that price to be going down. You want it to essentially get to 1-to-1. So that shows that we're both, in terms of the strength of our dollar or the strength of our currency, equal. When it's going up, that's bad things for China. So what that means essentially is that their currency is being devalued. When your currency is being devalued, it's essentially inflation, right? Like your currency is worth less. It doesn't buy as much. Prices are probably rising. Well, at least it feels like prices are rising because you're losing the value of your dollar because it's just sitting in cash. And then you add in the fact that one of the things that I learned was that they have 20% youth unemployment for Gen Z. So the one thing that's so shocking here is that this is the rate of unemployment based on 16 to 24-year-olds inside of China right now. That does not bode well as a recipe for anything good, especially when you think about we've seen riots in Hong Kong in 2019 and then into 2020 before COVID. We saw riots in China and massive unrest during the end of the COVID lockdowns where people were protesting in the street. People were getting very upset about there being no jobs. People were getting upset about having to do testing, about especially like when we had that situation where someone died in a fire in their apartment in China from being welded in. That was just one of those things that really started to rile up the citizenry of China. And you may not think that they're super well connected because if you understand the geography of China, the north, the south, the west, they're all very different based on the geography and what they get. Like the north has all the power, that's where Beijing is. The south has all the money, that's where Shanghai is. That's where Macau is. That's where like Hong Kong is. So they're much more secessionist at the bottom, and they're much more like kind of like they want to buy into the system in the North, essentially more of like, I don't know what the term would be, but more of a bureaucratic kind of society in the North, because that's where Xi is. So when you look at 20% unemployment, youth unemployment right now, in a time when they are completely reopening, you'd expect a recovery. That's not necessarily a good thing to expect. And this is a great little report from Goldman Sachs. If you want to click on that link, you can see that. Now we're going to jump right into the market performance. So last week's market performance, it was an ugly close on Friday. You can see exactly what we have here. It was an ugly, ugly close. Essentially was red, green, and then ended red across the board, except for the Russell, which is a very interesting signal. And I did notice that the S&P 500 was up 0.06 basis points for the week, and the Dow was down 1.4 or 1.14% for the week, in the Nasdaq. And I joke, as tradition, led the way at 5.1% for the week. Now, when we look, the one thing I did want to call out, the reason why this article is titled this, which is the Dow Jones better not fuck up this week, and can it stay above this price, is because when we look back at the Dow information, we will potentially be going negative on a 1 month rolling return. So what I'm going to need to see is we need to close above 33,833 just to keep a positive return. It is only 100 points higher than where we closed on Friday. So you do have all week to be able to close there. And I'm actually going to show you how I see it. So I'm going to go to my overall dashboard here. So I do have the Dow Jones Industrial Average already in. I'm going to go to the daily data. One of the things that's really interesting about this, and if you watch some of my daily active videos, which I post regularly on Twitter, what you'll notice is that this price right here, I'm actually going to zoom in a little bit just to make it easier. This price right here is in blue. So it's got a blue background with black lettering, which you notice none of these other prices have. You've got green, you've got red background, you've got white background with red lettering. The last time that we saw a blue background with black lettering was on the 31st of May, and that was a series of, like, we essentially had been down for what it looked like was probably about the entire month of May. Essentially, people were kind of scared that we were not going to do well. But that was a great place to buy. So what would I be looking for is a signal that right here, even though we are looking like things are starting to get a little bit worse in terms of the way the Dow is reacting, what would I be looking for? First off, what I'd be looking for is a 15-day rolling positive change, as well as maintaining a 1 month positive rolling change. And I'd like a 5-day too, but we'll focus on the big basics first, because right now, if we look here, the 1 month rolling change, what we need to close above next week is $33,833.61. Now that is about 100 points higher than where we are right now. So it isn't a lot when you think about a percentage change. But if you think about where we're going to be the following week, we have to maintain even higher. The following week, we got to be even higher, or the following day. We really need to be conscious about where we're going to be by the end of the week, because the end of the week, we really need to be essentially around 34,000 or closer. And right now we're about 300 points from that. So you're about, 1% or 0.1% away, or 1% away essentially from where we need to be by the end of the week. If we can have a 1% week, that will be a great change. And if we look back here, being down 1.4 or 1.14% for the week, and then being up 1% the week before, 2% the week before, 2% the week before, that's not a crazy move. It just shows you what we need from the Dow. And the reason why I'm bringing this up is because the Dow is a major weighting, not in a lot of specific ETFs, but they do represent the 30 largest companies that are in the Dow. And that's a valuable signal to pay attention to. So when I'm looking at it, I'm going to go ahead and look at where can I move this? I'm going to go ahead and look at the quick review here. Look at the Dow going sideways. That's not great. Like, the sideways action is not the type of behavior I like. When we see the daily sentiment indicator, we can see that it does look like it's probably starting to roll over, similar to what it did right here, right before the beginning of May. And we just highlighted the data in May, where you saw that it got incredibly negative, and then it bottomed on the 31st. Right around here, where the bullishness finally broke back above that 15-day moving average of bullish or bear sentiment. So we want to watch and see what happens. This is a big week again. We want it to hold above that 15-day moving average. It can go sideways for a bit, but if we see a drop like this, that could definitely mean bad things ahead. And again, the Dow is not representative of most ETFs or mutual funds, but does represent some of the largest companies in the country. And it's one of the things that people will be paying attention to. If the Dow goes negative, it'll be all over CNBC, because I'm pretty sure the old guys on CNBC love the Dow because their dad told them about it. So if we look here at what we have in like a trade range, again, the bottom of the trade range, we're pretty much at it. So I don't expect that we can go, we could go to 33,380, and we are currently at 33,734. Now that is a decent move in terms of points, but we need to really get back up above 34,000 by the end of the week. Depending on what happens, we're not in charge of the market. We just have hopes, guesses, prayers, and predictions. But this is essentially what we're looking at, is that we've had a good run since the end of May. The month of June was great. Looks like the month of July, we might be stalling a little bit. But I'm very curious about what this is going to look like, so I'll be paying attention. But if you want to hit me up, just hit me up on Twitter. Let's get back to the newsletter. So now what you'll notice is essentially that's what we'll be paying attention to is the Dow for this week. We do know that the S&P 500, the Nasdaq, they're still both in bullish trends. The one thing that has changed though is that they have bearish. They've like slightly changed. So I'm actually going to pull up. What I'll do here is I'm going to look at the. I'll look at the. What do people prefer? I'll look at the SPY first. We'll go here. The data will just show up. What we're going to notice very quickly, because this is the index, so .inx inside of Google Docs and the Google Finance will give you back all of the data. What we can see here is that essentially we're still positive on a 1 month, we're still positive on a 5 days, still positive on a 15 days, still positive on a 1 month, still positive on a 3 month, still positive on a 6 month. So these are all really good things to see. It has been negative the past 3 days rolling, so that's not great, but we still have go long, and go long signals for my intermediate, my short term, my intermediate, and my longer term. But we do notice that we've shifted to now all of a sudden we have bearish behavior in the short term and their intermediate term. So this is where I'm saying that they still are long term bullish, but the intermediate trade essentially looks like it's going bearish right now. I mean, the price is below its 5-day moving average. Not really pumped about that. I'm really kind of concerned about what I see when it looks at these indexes, because I see that I have from a rolling sentiment perspective, and I know you do not understand this, so I apologize in advance for using terms and using data in a way that you may not fully understand. But what I can see right now is that this doesn't appear to show you any rate of change positive, right? We're essentially seeing a rate of change negative. And it's not that we're negative, it's that things were so hyped. When you were at above 60% here, on this short ultra fast sentiment, we were above 60% here. We got all the way up to 63% here. That's a signal that we're probably overbought and we're probably due for a little correction. Now, we did push it all the way into July, but I'll be really curious to see. And the thing that I also find really interesting, and I'm taking it really deep into the data now, the thing I find really interesting is that all of a sudden I've seen the VIX, and I don't believe in technical analysis on the VIX, but the VIX had a hell of a week. It had a slight breakout this week where all of a sudden on Friday it was up 8%. Or on Thursday, it was up 8%. And then the next day, it was down 4%. The moves are just getting very large. And the one thing that's slightly concerning to me is that I noticed that the correlation of the VIX to the indexes right now, if I scroll up, this is in the New High newsletter, actually. I'll go back and look at it. If I look at the correlation of the VIX to the SPY or to the index, things have gotten positive. So this is the actual ETF for the SPY. You can see this is the VIX to SPY correlation. Things have actually gotten positive. So the correlation of the indexes is 2 when the VIX breaks out, the prices are going to rise with it. That's a really interesting setup because normally you don't see that. Normally what you're going to see is that the price is going to be inversely related to the VIX. So looking at what we see here, the index is not as related to the VIX as the SPY index is, or the ETF. But what I'd be really curious about is like, what's going to happen? Because is the correlation going to continue to rise, or is the correlation going to roll over? If the correlation continues to rise and the VIX continues to break out, well, then prices are going to like gap up higher. That's just how it works. If this correlation rolls over and the VIX starts to fall again, then you're going to get prices to move up slightly. Now, that's a really just interesting thing to look for. The Dow is really telling us a lot of what we should be paying attention to right now. But this is just really how I'm looking at things. So I'll go back to this Dow area because this is really important to me. This week for the Dow tells us a lot about what we should expect for the rest of the month of July, especially if we get the follow-on of the SPY, the Nasdaq, the Russell, all that kind of stuff. Now, I do want to highlight one thing that at least I generally look at from like a larger, or like if I want to step back from the macro view, is going to be the VIX and VVIX. And shout out to like Darius Dale or Hedgeye or a bunch of different people who will look at indicators that are like relative strength. I learned a lot of this stuff from like Tom Dorsey from like Dorsey Wright, but this is a really interesting and really useful way to look at the market as well. So this is essentially what you'd consider to be like just a large fear indicator. So every single time that the price drops, that's when you have major fear in the market. So you can see here, like the most reasonable one in our mind probably is the COVID crash in 2020. You can see that complete drop down. That was the COVID crash in March. Then this rally where the blue line starts to go up and we start to see things trending higher. That's really the recovery where you saw prices really just peak. And you can see that it peaked here in the middle of 2021, which now if we all look back on, I think we know that 2021, I think it was November 9th, was the peak of like Bitcoin, the peak of the index, the peak of Carvana, the peak of like everything at the time, probably NFTs, everything. And since then, it was essentially moving down until we bottomed right before the beginning of 2023. And then we've been essentially in an upward trend, which has surprised a lot of people. I wasn't as surprised. I was expecting a bearish move just because I was thinking, oh, the real shoe's going to fall in the future. But once I looked at this indicator, I had to realize like this is good. So the change this week was that we were making jagged highs earlier into the week, and we made a dramatic fall this week. So I will be paying attention to this indicator too going into the week and just thinking about how can I potentially use this for trading. It's just one of those things that I try to think about in terms of like stepping back, not looking at individual positions, not looking at individual indices, not paying attention to specific ETFs or certain plays or FinTwit or whatever. I just want to have an idea of if I can only have one indicator to look at to know if I should be investing, what would it be? And for me, this ratio would be it. So now we're going to go ahead and look at the correlation specifically between the VIX and these ETFs, the major ETFs. So this is the SPY ETF. The one thing that you'll notice is that this VIX correlation is at 6.17% and it says rising. So if we look, this is the correlation to VIX chart that I showed you earlier for the overall index. Look at it. It's slightly positive. Do you notice a difference between this and every other time in history? Almost every other time this thing is going to be negative. The one thing that I will call out that I find to be very fascinating is that if you look, these are the months. The last time that this thing was positive was right at the turn. It was right at the turn at the end of the year. It got incredibly positive as it went into the end of December. And if you remember the end of December, that was when things got very hairy. Things got very uncomfortable as we went into the month of December at the very end into January. And then it started to break out. We kind of got scared again. And then it's been rising higher ever since. So I'd be very curious if what we see is something that's very similar to what we saw at the end of December, the beginning of 2023, where we get kind of like a shakeout for the rest of the summer, something that just terrifies people into thinking that things are going to be terrible. Maybe we get some bad economic data, maybe earnings miss, maybe whatever. And then suddenly we get a complete turnaround where we're climbing a wall of worry again. We're doing exactly what we did at the beginning of the year, where nobody figured that Tesla could go up by 100%. Nobody was thinking that Carvana was going to come back from the dead, anything like that. So you can see right now on this daily trade range that the SPY is closer to the top of the range than the bottom. We could see it just go sideways for a bit. Here on the weekly range, I do find this incredibly useful because if you look at the weekly range here for the SPY, what you can see is that this thing essentially was riding at the very top of its overall range for all of 2021, and then it peaked at the beginning of 2022, and then it essentially went down and then rode the bottom of the range. It's been hitting the bottom of the range ever since, but it hasn't hit the bottom of the range since probably September of 2022. And ever since then, it's now been going either sideways or up. And now it's back kind of sliding at the top of the range, which if we look at 2021 from 2020 to 2021, that was incredibly bullish. So I'll be very curious to see what happens there. We'll go ahead and look at the DIA. So this is going to be the ETF for the Dow. Again, we already know that this is not great. We spent a bunch of time at the very beginning, but I do want to highlight that the correlation is also positive. And actually, if you look here on the DIA, the correlation is twice what it is on the SPY. On the SPY, it's only 6%. Here, it's 12% and rising. So you can see here, we may be getting the exact same thing we saw at the middle of the year, at the end of December, the beginning of January, where this is just going to be one of those shakeout processes. I do want to call out that there is currently no go long or go short signal in the DIA, which is hard to do. And I'm actually going to show you what it looks like on the actual data here. I'm going to go ahead and type in the DIA. We'll go back and look at the daily data. I got to come over here because that's where it is. The data is going to show up. It'll take a little bit of a second because also I'm recording, so I'm using a lot of bandwidth at the moment. But if we look over here, what we can see is in the signal area, I don't consider one single go long and then no other signals to be true. What I consider is when you have a daily and it is either long or short, you have two. You have a short term and an intermediate term. They both confirm. So that's why I'd say that currently there is no signal on the DIA. And again, you can see here that it's light blue with a black background. It's at 2 standard deviations below its mean. It completely could reverse from here because actually if I look, it is $2.85 below its 20-day or 23-day moving average, which is 3 standard deviations beyond where it normally is based on this range. So it is a very interesting thing. Like the DIA is actually in a really good place if you're thinking about taking a new position. I wouldn't be too terrified of it. I'm just kind of talking myself into it as I'm looking at the data while we're doing this together. And if we look here at the trade range for the daily on the DIA, look at how much at the bottom that thing is. I mean, yeah, you have some concerns because you don't want to be riding the bottom. You don't want to be like you're fishing for walleye, just dragging your jig across the bottom of the lake. But like you do want to see at least a little bit of kind of sideways action because sideways to up is what the market does 66% of the time. It only goes down 30% of the time. People think that like, oh, I'm going to call a crash. Dude, you know how hard that is? Just statistically, the market goes either sideways or up 66% of the time. And those crashes that you're thinking, they're not that big. I mean, you end up having like a 2% down day and you go, ooh, called it. No, you didn't. It's up 20%. But regardless, I digress. If we look here at the weekly DIA trade range, what we can see is that it is incredibly low volatility. When you get a tight range like this range here, when you see the red bust out, the green kind of bust out, and it gets really fat, like it's an anaconda with a big deer inside of it. All of a sudden, what that is when you have a big break in volatility, which is exactly what we saw at the end of 2020 or the end of 2021, the beginning of 2022. When you saw these big jagged moves, that's a lot of volatility that blows out the range. We've essentially been going sideways since, I don't know, December or November of 2022. We haven't really gone anywhere in almost a full year. So if we're looking at it, we'd say we're going to expect that this is probably actually going to go up because that's what the market does. The market tends to go up over time. And when you look at the way the range is set up, the range is kind of showing you like, hey, a big move is coming, because that's exactly what it did at the end of 2021. The range was expanding because we had a lot of volatility. It got really tight here at the middle of 2021, and then it broke lower. And then it expanded, and then now we're at the exact same place where we just hope it goes up, but who knows? We're going to look at the Qs here. The Qs, again, continue to be the strongest one in the entire group. There are bullish trends since 516. Again, also no signal. It is really interesting to see that all of the index essentially gave no signal this week. It is fascinating, but you also think it was a very low volume week. You can see here we do have one small signal for go long. Again, I need two signals for me to believe it. I need the short term and the intermediate term, or I need one long term. And right now, I just don't see it, as well as we do look like we're bearish on the intermediate and short term. That's not good, but we are bullish long term. So I do still believe in the Nasdaq. We'll just be very curious to see what ends up happening. You can see here, though, the one thing we keep highlighting is this VIX correlation. The VIX correlation on the Qs is the lowest out of all of the major indexes. It's only at 1.16 or 1.61. It's barely positive. But again, you've seen that actually the VIX and the Qs have gotten much more correlated much more regularly than the SPY or than the Dow. So this may not be as much of a concern because the Qs continue to just be the leader of strength with the large cap tech, the large cap growth, the names that everybody loves to own, that all the product man or PMs have to own at any time, just because you need to keep up with the market. You can't lag it. That's your benchmark. We look here at the overall trade range. It does look like we've seen a lower volatility since the range has come in. Looks like we're continuing to move higher. Even though the range has come in, this has still an upward slope, which if we go back to the DIA on the weekly doesn't have any upward slope. I mean, maybe slightly at the very end here, but the Qs definitely have an upward slope in their overall trade range. So that's super cool to see. If we want to look here at the weekly, now the weekly, I will admit this one is bonkers. And it's bonkers only because you're like, how can an index on a weekly basis create moves like this? We're like, look at this. This thing is screaming higher. The red bar of that range is screaming higher, while the bottom of the range is essentially, it's kind of like meandering its way up, which lets me know that right now that the volatility is insane in the Qs. I mean, if you've essentially bought it anytime in 2023, you've been very happy. That was the time to buy it. As soon as you saw this flip up, I'm going to go ahead and look. I just want you to see what this looked like too, because like you can see it on the daily range at the beginning of 2023, this thing went up, started to hit the top of the range, consolidated, hit top of the range, consolidated, top of the range. But I want you to see what this actually looks like when you're looking at the raw data. So if we go back, can I get all the way back? Yes, I can. So this is the daily activity, and I want to see the daily activity because I think it's really important to understand. So we're going to say that this is January 1st here. You can see at the beginning of January 1st, after we come out of December was very bad. If you see the blue lettering with the white background, that's all very bad. You can see how negative it was on the 15-day rolling, how negative it was on the 1 month rolling, how negative it was on the 5-day rolling. It was all very bad. And then you see a change. And for me, I always want to see a 1 month, 15-day, 5-day, and 1 month all converge into rolling positive around the same time. Then what it did was it gave a go long in the short term, go long in the intermediate. And like I said, that's considered a full-on true go long signal to me based on the thing that I built for myself. So you're just getting to see what I built for myself. We have short-term sentiment, intermediate sentiment, and longer-term sentiment, which have all gone bullish. Now we did get a flip here. I would have ignored it because I had go long, go long, go long, and the bullish, bullish. I need two of the short term or one of the long term, and they can override each other. So I would have noticed it right away, and I would have been like, okay, this would have been a time to buy. I probably would have waited for what would have been a green day, which would have been a nice little pullback. This is a day where we ended up being down over 2 days. We were probably down over 2.5%, but you were back in the middle of the range here on the 19th of January. So if we go look at the 19th of January, I just want to do this live with you because I think this is kind of interesting. If we look at the 19th of January, we were right here. So it was this little bottom one right there. That pullback from the top of the little range was right in the middle. That was within the standard deviation of what the probable outcomes could have been. And that's why when you look at the individual data, you can see that, yes, this day was green, and you maybe would have been a little scared, especially after what had gone on in December. But you had confirming signals in go long signals, in rolling sentiment. And if I look, like I'm going to go ahead and look over at my signals. I'm going to go even further. We looked earlier at the rolling sentiment where I showed you if it gets above 60, that's a problem. It was coming off of the 40s. We had just gotten a rising bull And so like there was a lot of confirming evidence. And then if I go all the way over here to these are going to be a little confusing to you. But if you look at this bull key 3, you see on the 17th here, the 17th had 3 signals. If it has 3 signals to me and there's no negative signals, that's an all go. That's an all go, as well as I know that I'm getting some of these small bulls coming. Got a coming rising bull coming. Got a rising valley. Again, I know these mean nothing to you. I built this for myself, but this is just, I want to show, because I think it's important for individual traders to understand, like, not only can you build your own process, you can have a good process. Like, you can learn everything you need to in the world, and you can subscribe to something like the New High newsletter and just get someone who does a lot of this stuff for you and is pointing these things out to you. Or you can learn how to build it yourself, which, again, if you look at the bottom, I do have a course. You can learn how to build the exact same thing, but that's your call. Now, if we're looking back here at the Qs, this is the type of signal that I want to see right now, because we're definitely seeing that it is a little overbought, right? Like, it's definitely, if we go back, the price is probably going to be red right now. Actually, it's green. Okay, so the price right now is green, which, again, if you believe in the bull market, this is a great place, just like we saw back in January. So I'll be very curious to see what ends up happening with the Qs. The volatility, it's related to it, but it's just, you want to go long. I mean, I see bulls, I see bears, and I see the price going up. So I'm going to stay on the right side of the trade. We'll look at the small caps now. The small caps are probably the most interesting one outside of the Dow for this specific article, because the small caps have really changed the way that people have viewed the market. And the reason I say that is because most of the time people believe that the market can only go up if small caps are participating. That's like the idea that you can only have a bull market if banks are participating. Maybe, maybe not. I don't want to be the guy who misses it just because I have some antiquated rule from 1923. You know what I mean? Like, this is really going to be a test of the people who have conviction in the upward move and in the bull market, because the small caps are not projecting that this is necessarily a great market because the breadth isn't there. And we are bullish since 524. We don't have a signal, just like the other indexes. And we do have a slight positive VIX correlation at 5.8%. So this is what I was trying to highlight at the very beginning, is that the Dow, the Nasdaq, the SPY, the Dow, and the Russell all have a positive correlation to the VIX right now. So in theory, we really actually want high volatility, because that's going to make the indexes gap higher. And then we want them to lose that relationship and fall back down, and the VIX to fall. And that'll make us rise even higher too. Now, this weekly range, it's so interesting to see, because now that we've discussed the Dow, now that we've discussed the Qs, and we're looking at the range here in IWM, what do you notice? This thing essentially got very tight in 2021 when it wasn't going anywhere. You can see how small that range got, and then it broke out as it started to fall down. Then a false breakout, and then it fell. Now, essentially, we've been losing volatility for a while. We can see that the narrowness of the bands is coming back. We can see that the bands essentially are hitting the top, hitting the bottom, staying in the middle, and then continuing the process of essentially doing nothing. So I think that this is actually very positive, because I think that you want your star players sometimes to lead your team, similar to how we have, what do they say, the Magnificent Seven. I think it's Meta, Microsoft, Apple, I don't know, Facebook, I don't know, whatever it is, Tesla, all that kind of stuff. But those specific companies right now are leading the market, and the small caps aren't falling. So for me, I say that the small caps are essentially waiting to get picked up when the economy fully turns, after you have the mega caps really continue their dominance, and they need to kind of lead the market into a better promised land. But again, this isn't negative. When I look at the IWM, it's bullish. It's been bullish. Like, it doesn't look great from a movement perspective. Okay, so just as a reminder, right here, the Qs, they're up 24% in 1 year, and in 5 months they're up 22%. Let's just look at IWM so you can see the difference. Okay, because IWM is definitely not up that much, but I don't think it's really down. Right, so it's up 5.19% over the past year, and it's for 5 months it's at negative 2.954%. Which, yeah, you're definitely losing money there, but over 3 months you're up 4.27%. So things are getting better. So that's what's really interesting to me, is that even though we're not seeing a lot of conviction here, we have seen this thing's essentially been bullish. If we look, it's essentially been bullish since the middle of May. So since $175 when it went bullish, and you got go long signals, and you had the 1 month and the 15-day go positive, it's been up. It hasn't been up a lot, but it's not like the worst trade in the world. We're not back down here in the 170s. We're not down in the 160s. we're at 184. Like, we're in a nice spot right now. So I'll be very curious to see what this does over the next week as well. So just be cautious of the fact that the VIX and all the indexes currently have a high correlation, as well as the fact that each of these individual indexes is at a different place. Now let's get to the important part of this entire video, which is the new highs. And this is the reason why people subscribe to the new high newsletter, because we end up sending you between 20 and 25, sometimes even 30 individual stocks that have either started to break out at 52-week highs or at a new high. So all of these stocks you're seeing right here, each one of these is going to be between $5 and $20. So these stocks, they will be breaking out. They'll be above $5. They'll be below 20. Some of these stocks do actually get bumped off because they break over 20 bucks, and that'll happen. Sometimes you'll just see them on the $20 plus list. So the first one we want to highlight is VRRM, which is an infrastructure operations company out of the United States. We highlighted it for the very first time here on the 4th of June, where if we go back and we look for VRRM, we highlighted it again. It was on the new high newsletter when it was $18.65. Back, you can see here is 6.3 was when we essentially took that picture. So now we're up at 1978. This thing continues to essentially just run higher. The one thing that I do really appreciate about this is that it also has a positive correlation to the VIX, and it has a really high correlation to Bitcoin. Now, that may not seem like a really big deal to a lot of people, and personally, I don't really care that much, but I do know that Bitcoin is essentially a great representation of liquidity, because when there's more liquidity, Bitcoin goes up, because Bitcoin is the furthest thing out on the risk spectrum. It is riskier than investing in a company. It's riskier than investing in an idea. Technically it is an idea. It's probably riskier than like anything that you could think of in the world. And it doesn't mean that it's bad. Risk does not mean bad. If you take risk in the market, that's what we all do here. Bitcoin just doesn't have, it's still too confusing to for people to understand why it has the value that it has. So when the price is going up, that means people feel really good. Really good. Remember how good people felt in 2021? Why do you think Bitcoin was at like $68,000? Because people felt real good. So the idea that Bitcoin is rising and this has a high correlation to Bitcoin, I kind of like. And this thing, I mean, it's just a steady eddy. I mean, over the last day on Friday, it was up just a little under 1%. Over the entire week, it was up just a little under 2%. Over 15 days, it was up just a little under 7%. Like, these are the type of stocks you want to buy, you want to own, you just want to wait until they tell you to leave. And right now, this thing is just saying, give me your money, I'll take it somewhere else. And if we look at the overall trade range, the trade range looks great too. It continues to go higher. I'd love to see that. We'll look here at PCT. This is a pollution and treatment company out of the United States. It had a big week. Actually, not a big week. It's had a big 3 weeks. It is up 30% in 3 weeks, which is incredible to see. Still at $10.60. I don't know if this is even a $2 billion company. So you could see some really big moves out of a company this size, especially considering people are just looking for small cap names. Let's see, for PAA, oil and gas midstream. Now, this was a big week. I mean, a 3.1% week for a company. I mean, it doesn't seem like a big deal, but it's big enough, especially when the market was essentially flat for the week. It's up 9.11% in 15 days. It's great to see. The move was it looks more exaggerated on this short-term chart. We look at this 9-month chart. It actually doesn't look exaggerated at all. It looks like it's a proper breakout after a nice little pullback. It does get a little jagged. I wonder what the volume is in this thing. The volume's not crazy, because it says volume is falling over the past 10 days. It's 2.5 million. We'll look at Dow, which is Diamondback. Now, this chart is insane. When you have an 8.29% one-day return, that's kind of nuts. When you're up 17.10% in 5 days, a little crazy. Might be expecting a pullback here, because if we look at this range, it is 3% above the range, which you can see. It's 3% above the range. The midpoint is probably 12. I probably think it's going to come back maybe to like 14, maybe 13.50. That's probably about as low as it's going to go before it really breaks out even higher. And then we'll look at CSTM. This is the aluminum company in France. This one did not expect, just popped up on the radar because it had a good week. It continues to break out. Over 1 year, it's up 31%. Over 5 months, up 21%. Over 3 months, up 16%. Like, these aren't gonna like blow anything out, but these are the type of things that at least people are buying, and the price is rising. So the narrative of like a bear market or everything's going down, there's still things that are going up, and some of them are in France. Even when they're rioting, people want French aluminum. And look, if you notice here, it has a negative correlation to the VIX. It has a very high correlation to Bitcoin. Very interesting. And a negative correlation to the dollar, which is good, because I think the dollar is falling a little bit right now. Actually, let's take a look at that. I just want to call this out, because this is the joy, by the way. When you build your own tools, you have the ability to, at any moment, just ask any question and pay attention to what may be happening. So we're going to look here at UUP. UUP is a bullish index for the dollar. One thing that I do notice is that, so right now the price is below its 5-day moving average. I do see that it went negative on the 1 day, 5 day, 15 day, and 1 month, which is not great. The essentially what we've seen here, yeah, I mean, it's bearish on the long term, bearish on the short term, and bearish on the intermediate term, starting, it looks like, in, when was that? June 5th, but it still is bearish on this long term. So right now, I'd say that it is neutral, because bullish, and one bearish, I don't trust. And then I do have these two signals, so maybe I'd say maybe go along a little bit from here if you wanted a short, small trade. But I don't really trust this very much. If I go ahead and look, so here's the thing that I would say is relatively positive, is that we have a rising bull, and we can see that right now we've got very bad rolling sentiment inside of the dollar. We do have white lettering with a black, or white background with blue lettering, which means it is 3 standard deviations below its current standard deviation price. That is not great. If we look, we can see we've got 14 bear signals with I mean, that's just not good. Like, you don't want to see a high negative correlation, which is negative 50%, to rising bear signals. That's not good. And then we look at these. I mean, yeah, it's really saying that you most likely are going to see a coming rising dollar. If you have to make a call, I wouldn't buy it, but you definitely have to make a call. And that's interesting, because this trade right here has a negative correlation to the dollar. So if the dollar is rising, I would not expect this to do very well. So we'll be very curious to watch the dollar as well as the Dow this week. Now, the one that's really shocking, that has just continued to just stay on the same active names list of either the most active on Yahoo Finance or the most active in FinTwit, has been CCL, this Carnival Cruise Line. People love this stock. I mean, obviously, aside from the fact that it being one of those like COVID names, so it essentially ushered us into the era of the 2020s inadvertently because of carrying like an entire jail cell of COVID. It was up nearly 1% on Friday. It was up nearly 11% in a week, and then up 22% in 3 weeks. Now, that's exactly why. Like, when you get moves like this is what people fall in love with. I mean, it is 20%, or it's 9%, 9.5% below the top of its range. But if you look at the range, that's why, because the range has been blowing out ever since you got this tight consolidation. Then you got to move to the upside. It's essentially been showing you like we're all go. And again, if you remember exactly when you saw the Dow or the IWM, this is what you're looking at. You see a very tight range. You see a move to one side. The volatility breaks out, and then it just keeps going. We're going to look here at IREN. It's Capital Markets in Australia ETF for some company. I'm not sure. All I know is that in 5 days, this thing is up 40%, which is crazy. This thing's up at $6.67. It is a little overbought, most likely, just because that move is a little bonkers. But you know what? Some people like to ride the Bronco. That may be for you. So let's see, AAOI. This is a nice move. I really like this because this has been slow and steady. I mean, one day being up 10.45%, that is a lot, I will admit. And then over 5 days being up 32%, also a lot. And 15 days, this thing's up 91%. Okay, this has got to be overbought. Like, I'm sorry. Like, whoa. Okay. When you see moves like this, you honestly wonder if it's real. Like, and I'm not saying there's anything manipulation. I'm not saying there's any fraud. I'm not saying there's no real catalyst. I don't really look at the individual stocks themselves or like closely from a fundamental basis. All I can say is what I'm seeing right now is that the overall like review is, this is from $2 to, I don't even, was $7. I mean, that's made fortunes. There must have been a lot of short interest. I pray that everyone made money on that. No one lost money. I really pray. I pray that the only regret in that stock is that they sold, not that they were short. If we look at this CLS, computer electronic components in Canada, this is an interesting one. I mean, this is kind of a nice stock. It's been moving up essentially since the middle of May when it broke above the 15-day moving average. Still has 5% upside, does have 13% downside. I mean, the trade range, again, you see the moves, it gets tight, you get a little move. This was like a fake out drop. But you do think that this would continue. I mean, it's the highest price in the past 9 months. It looks like it can continue to run higher. It's around 15. Riot Capital. This one, the reason I'm surprised by this one is not because of the price move, because Bitcoin was up. I'm surprised because the correlation is currently only 31% to Bitcoin. You think it would be higher, because my understanding is that Riot has a lot to do with crypto, or at least Bitcoin. Again, I don't look at the companies. Maybe I'm wrong. Maybe I'm right. You can tell me in the comments below. But I'm very curious about what the move will be in the next week, because this is a huge move for something that I know was one of the darlings of the 2020s, 2021 era. If you look at this trade range over the past 9 months, I mean, it's essentially been, once it plateaued here at the beginning of 2023, or stalled at the bottom, whatever you want to call it, it's essentially been going sideways, up, a little sideways, up, sideways, up. So you've seen essentially the return of bullish demand, which I love. American Airlines, wow. I mean, the idea that this is a real company and it's got this kind of a move. And do you see that? 81% correlation to Bitcoin. That's just, again, it's just like a weird thing for me to notice that it has such a high correlation to Bitcoin. And it has a 5% correlation to the VIX. I mean, this thing is 4.13% below its top. I mean, the range on this thing right now. And again, you're seeing it just kind of consolidates, consolidates to the side, you see a breakout, the range goes, and the price just never looks back. But tell me what you think, because I'm not going to review the rest of the stocks that are in this individual newsletter. You can go ahead and you can subscribe. You can go check out the newsletter on the bootlegmacro.beehive.com blog. You can always feel free to message me on Twitter at bootlegmacro. You can always feel free just to comment on any of the videos. Tell me that you like something. Ask me to review something. Maybe I'll just do a video for you. But I'm very curious what you think. I mean, essentially this week is telling us we need to pay attention to the Dow. We need to pay attention to the correlation to the VIX. We need to pay attention to what's going on in China. And then after that, let's just look for new highs and make some money. So tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And don't forget to subscribe to the New High newsletter. It comes out every Sunday at 9 a.m. I'll talk to you soon.